Hello, everybody. So, another very boring day in the market. I really hate August. It's not a good month. Other months give us some deals, give us some red so we can buy some deals, or give us some green, but I want some action. Unfortunately, the volumes are so low, and so I want to talk about two things about this video. It's not that much action. So I want to talk about HIMS and the whole short situation with HIMS, and I want to talk about REAX, which is kind of part of my renewing the portfolio efforts of trying to find new gems. You may have seen I've done some exclusive deep dives on a bunch of different stocks, trying to find the gems. Not always very easy to do, but sure enough, when I first started covering HIMS, it was a gem, and nobody had noticed it. And so alpha lives in places where people don't look, where people don't notice. Anyways, quick update on HIMS. If you want to know why the stock is down, in my view, the stock is so down because of the so awful low August volumes, and nobody cares. And it seems like the only people who care are the shorts right now. And of course, the next earnings report is way down the road, and so nobody really cares about buying that stock. HIMS is kind of left in a mini summer of despair, I guess, as I will call it. I will point your attention, though, to the short interest over time. This chart is very, very interesting, and it is the latest update, and you can see that the shorts recently just piled on like crazy on the HIMS short. There was another piling on, and if you look, like people keep doubling down on their shorts. They keep insisting that HIMS is not a company that makes it. They keep insisting that pharmacies are never going to be disrupted, mom and pop doctors are never going to be disrupted. They just don't see it. Wall Street just doesn't see it. And is HIMS going to be yet another stock that hurts Wall Street? At some point, are we looking at another Tesla here? Or another hopefully not a GameStop, because unfortunately, if it shot up like a GameStop, I might have to sell. But this is pretty crazy. And if you just type online, I just typed top shorted stocks, like most shorted stocks. This on MarketWatch, I think it's the top 25 or something like that. But you can see we are way up there at 34% short, and that's as of August 15. So there's even way more people shorting that stock. I do not know what is going on with these companies. Why do they hate it? And many of these stocks I don't know of. Yeah, maybe Beyond Meat, they're filing for bankruptcy. Maybe that makes sense, shorting that, but like for example, asset entities, why would you short that? That's Bitcoin. That's pretty crazy. This thing could be so explosive, and you have 46% of people shorting. I never understood shorting. I would never short a stock. I think shorting is probably not very, very good for markets as a whole. That's why some markets have strict regulation on shorting, like Korea, for example, often bans shorting for like longer periods of time. Anyways, and why would you want to be so short? Like, why would people short HIMS when we have such big catalysts, and when this stock has a history of being hyper choppy? I'll show you the catalyst. Of course, testosterone and menopause. Perhaps a dual launch we're gonna get for both of those. We have international expansion. People seem to have forgotten the cheap Zava acquisition, how little they paid. People seem to have forgotten the astute fundraise that HIMS did a few months back, right? It was in May. It was when the stock was very high. They raised more than $1 billion, 0%, very astutely. That was a great spot for you to get funds into the business. They forgot about semaglutide and Novo losing their patent in Canada, which is leading to a Canada semaglutide launch in 2026. That's going to be a catalyst. My take is that, yeah, of course, we don't sell branded semaglutide in the US anymore, but my guess is that HIMS being a marketing machine, they're going to be very, very good at gaining back their customers and moving them to either a liraglutide injection, which is, in all fairness, pretty good. Not as good as Sema, but still pretty good. or get them on a metformin / bupropion based pill, or even a mix of the two. And the pills, a lot of people are much more comfortable taking pill than injection, and I think that's a big business. I know it's already a big business for HIMS, but I think that's going to keep being a big business. Another catalyst that a lot of people are not looking at is the ED rebound. HIMS noted weakness on ED. LifeMD, which reported later on when HIMS said that ED was fixed and that they were going to rebound. I think HIMS will also rebound on ED. And, take a time to pause. And you'll have a lot of people who are loud sometimes, but I mean, 4.7 and 4.8 out of 5 reviews on the App Store and on Google Play. It's pretty darn outstanding, if you ask me. These reviews, people love the product. People love the product, and that's why they have a nearly half market share. And sure, you have a random person who complains, but it's not the vast majority. The vast majority of people love the product. 69,000 reviews, 4.8. Think about that. And so this stock is super choppy too. So why would you want to short it when you know that this stock has a tendency to do enormous bounces and enormous drops? And how many times have I covered this stock on either a huge drop or either a huge bounce? It's a super choppy stock, so shorting it is risky. I am fearful for people who have to be of a short position. It might hurt. And I will say that the performance on HIMS has still been outstanding, and this is a long-term performance. And you can see the people who got into HIMS, I got in between 6 and 9, 6 and 8. That's roughly when I was covering HIMS, about this period when I started covering the stock. Anybody who bought this stock during the period of despair, the grand valley of despair that it went through between, say, 22 and 24, maybe almost 2 years and a half of despair, anybody who bought in that region and DCA'd into that region is sitting on nearly a 10x. Give HIMS a good trading day and you're squarely in a 10x territory, and that's what this company has done. And this company is a 10 billion market cap. By the way, it could do that again. I mean, if pharmacies are going to be replaced, which I fundamentally believe that we're going to move to an online pharmacy model and an online prescription model, I have no issue seeing this business one day being perhaps a $100 billion business, especially within international. And if this business is a $100 billion business, you're looking at potentially another 10x. Now, of course, that could take another 4 years, another 5 years. It's the nature of investing. It is how it works. But nonetheless, it's a compelling play, if you ask me. And now I want to talk about something entirely different. I want to talk about gems, right? So looking for gems. And of course, on my spreadsheet on the Patreon, you can see this kind of a stock that I'm looking at right now as gems. I like CorMedix a lot, for example. That's another one that I didn't put in there, but there's a few here and there that I like. I like REAX. REAX, I think, is very interesting. REAX, so you can see my full analysis 3 months ago. And ever since that analysis, the stock is up a good 25%. Ever since I made that analysis, you're going to tell me it's not that big of a move, of course, but I'm not in REAX for 25%. I own REAX, by the way. I'm not in that stock for a 25% gain. I'm in that stock for a 10x, right? The key of looking at, say, a stock like REAX, in my view, is trying to see where the alpha resides, where's the over 10x. In my view, real estate will rebound. People are eager to sell. People are eager to move. And rates are going to drop now. The rate cut cycle has been, signaled. And it's likely going to be initiated in September, almost 90% on the CME Fed Watch tool. So that means that, mortgages are going to drop, and real estate is going to be unlocked. Now, I don't really know where prices are going to go. They could go up or they could go down. But I think transactions are going to go up. And of course, this is why I like a business like REAX, because REAX makes money on the transactions, unlike Open Door, which has a little bit of money making on renovating and on reselling the home. So Open Door is kind of, if you're betting on Open Door, embedded within the value proposition of Open Door is that the market goes up a little bit. at the very least. Or that's very, very good for your margins if the market goes up. If the market turns against you, and we don't really know what real estate is going to do, there might be a little turmoil as soon as rates drop, and buyers being happy to exit, and you could have some fire sales, that sort of stuff. I don't really know where real estate is headed, but I know that REAX has been able to grow the real brokerage. They've been able to grow very fast in the toughest market, and the market is going to get better. So if a company is able to grow quite fast in a tough real estate market, how are they going to do when the market gets much better? And I would argue they would do exponentially better with a little bit of a market's help. The real brokerage, what do? They are a digital brokerage. Essentially, they're disrupting the mom and pop local brokerage in your area that have been operating for 30, 50 years. They're trying to disrupt that. And how are they disrupting that? Well, they're going after the top agents, and they're trying to get the top agents to move to the real brokerage. They're kind of stealing the top agents from local mom and pop brokerage firms. And how are they stealing those agents? Well, not through advertising, not through fake reasons, fake marketing. No, they're not getting them like that. They're getting them by the money, and they're taking way less money. REAX is taking way less money than the usual brokerage, the usual local brokerage who has an actual office with actual computers and actual secretary, all of that sort of stuff. REAX doesn't have any of that. It is all managed by the app on the back end. And I would argue a lot of top realtors are moving to REAX. There is a very active YouTube realtor community. I suggest you look it up and you try to see what they say about the real brokerage. And it's all the rage. Should I join the real brokerage? Why I decided to join the real brokerage? Why the real brokerage may be a right fit for you? Should I dump my old broker to move to the real brokerage? I see this movement. And sure enough, I don't even need to see it. The revenue growth is there. We've had outstanding revenue growth. Forward revenue growth predicted to be next 12 months 50%. And a lot of people are going to say, I don't want to touch real estate because, of course, the gross margin is awful. 9%, EBITDA margin is 3%. Yeah, that's really, really bad. But here's the thing. Real estate companies of this type usually have extremely low price to forward revenue. Extremely low. You can see it's trading at less than half the revenue of next year. REAX, market cap, enterprise value, REAX's enterprise value is less than half the revenue of next year. Like, this is how crazy cheap this is. And so the drawback is, you get a little lower gross margin. But, if you move that by just a percentage or 2 percentage points, that could have absolutely outstanding effects on the EBITDA and on the cash flow of a stock like that. EV over GP over RG is 0.14. It achieves the rule of 40 out of 53. I can see exponential growth coming for this one, both as agents keep coming in, but also as these agents get more and more busy, as we may get, perhaps a winter buying season. Because when those rates drop, people are going to notice. If we get 2 or 3 rate cuts by the end of the year, mortgage rates are going to anticipate that. We're going to have lower mortgages. If we get a 5 handle on mortgage rates, people are going to notice. And I think we could have kind of like a winter real estate season even. So maybe that's maybe what's going to happen. If it doesn't happen, I'm happy sitting on the stock for years. And unfortunately, it's what I do. I have to sit on stocks for years because I don't know when they're going to pop. I don't really, HIMS. You look at HIMS. If I hadn't been sitting on HIMS for a good year I was covering HIMS with nobody taking an interest, then you wouldn't have been there when the stock pops and eventually does a 10x. So you have to be willing sometimes to be sitting on a stock for a while. And lastly, I'll conclude with this. Opendoor is getting a lot of hype. Opendoor may be squeezing, although I don't know because they only have 20% short, right? HIMS has much higher. HIMS has 70-80% more shorts shorting HIMS than Opendoor, but Opendoor is squeezing. Went from 50 cents to $5. 10x in no time. I find that sort of price action crazy. I do not understand that sort of price action. That sort of price action, such a huge move in such an amount of time scares me more than anything because, what if you buy at $5 and then it drops 80% in 3 months. So that scares me more than anything. It works well for a certain type of investor, like very risk seeking. Perhaps you're just starting out in investing. You don't have a nest egg that you want to protect. Perhaps that works. But me, I am totally less scared by a stock like REAX, which is growing at 50%, and the stock price is minus 20%. Okay, it went up a little bit over the past few months, but I'm perfectly okay with a stock. I want a stock ideally to roughly track the revenue growth. If revenue is going to grow 50% for the next 5 years, I ideally would like to see my stock grow about 50% every year for the next 5 years as well. I like to see them to track pretty closely. And usually, when I see a stock that's up 1,000%, when revenue growth is 100%, then I get scared. I'm like, okay, well, you overran that. So, anyways, I like REAX. REAX, maybe one of these gems. Another one that I've covered on the channel that I've looked at is Kaspi. Kaspi is also very interesting, but Kaspi has like next to no volume, next to no options. There's nothing you can do. So that's also a problem of these small issues. REAX, I find quite interesting. REAX is also marginable. It's got a teeny tiny options market, so you can't do much on that, but still. Anyways, I like it. This was not investment advice, not financial advice on this channel, only entertainment here. I'm an entertainer. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.